Okay, let's get right into it. We're going to unpack a pretty dramatic story today. How does a company seemingly overnight lose over a third of its entire value? This is the explainer for Ibotta's massive stock plunge and the huge high-stakes gamble that's behind it all.
So, picture this. It's August 13th, 2025. Investors wake up, they check their portfolios, and bam, Ibotta's stock has absolutely cratered. We're talking a plunge of as much as 36% before the market even opens. It was a brutal, incredibly fast judgment from Wall Street.
So the big question on everyone's mind is, what on earth just happened here? How does that much value just evaporate? That's the business mystery we're going to piece together step by step.
Yeah, this wasn't some slow decline. This was a sudden, violent shock to the system. And it all happened right after the company's second quarter earnings call. The market basically listened to what management had to say, looked at the numbers, and just ran for the exits.
And what came next was just this tidal wave of lost confidence. The big players, the ones everyone watches, started to bail. Goldman Sachs, Bank of America, Wells Fargo, one after another, they downgraded the stock. This was a huge signal that the experts were fundamentally rethinking what this company was worth.
All right, so what were these numbers that sparked such an epic fire sale? Well, it wasn't just one single bad metric. It was this toxic combination of bad results right now and an even worse outlook for what's coming next.
You can see the disconnect right here. Revenue was down. Okay, that's not great. But look at the earnings per share, missing what analysts predicted by nearly 60%. That is the kind of number that sets off sirens and flashing red lights all across Wall Street.
And as bad as the last quarter was, the forecast for the next quarter was somehow even worse. Management basically told investors to expect a revenue drop of around 17% compared to last year. So people weren't just reacting to the past, they were panicking about a future that looked like it was driving off a cliff.
But here's where the story takes a really interesting twist. Ibotta's management comes out and essentially says, hold on everyone. This pain, it's intentional. Their argument was that this isn't a business that's collapsing. It's a business being deliberately torn down so it can be rebuilt into something much, much bigger.
The CEO, Brian Leach, put a name on it. He called it a classic innovator's dilemma. He said, look, we could either make small, safe tweaks to our old business model, or we could take a huge risk, reinvent ourselves, and go after a much, much bigger prize. They chose path number 2. And they knew it was going to hurt in the short term.
So what is this grand new vision? It all boils down to this one acronym, CPID, Cost Per Incremental Dollar. Let's break that down. Instead of an advertiser just paying for a coupon to exist, they would only pay Ibotta based on the actual extra sales that coupon created. It's like paying for an online ad only when it gets you a sale. It's all about pure measurable performance.
And the ambition here is just massive. They want to move away from the world of limited promotional budgets and into the giant multi-billion-dollar world of digital media budgets that huge CPG brands spend. It's like they're trying to go from playing in the minor leagues to playing in the World Series.
Okay, so a grand vision is one thing, but actually pulling it off, that's something else entirely. And in the second quarter, Ibotta's big, ambitious plan ran head first into some very harsh, very painful realities.
The whole strategy hinged on getting these big-name clients to switch to the new model. But what happened? Their first 2 major partners for this new system suddenly hit the pause button. One wanted to wait for outside proof that this thing actually worked. The other just got tangled up in red tape and a shaky economy. The engine of this whole transformation just stalled out.
And it gets worse. As if trying to launch a whole new business model wasn't hard enough, they also decided to completely reorganize their sales team at the same time. The disruption was huge. It turns out that accounts that got a new sales rep saw their revenue fall by 16%. I mean, talk about a self-inflicted wound at the absolute worst time.
So, with the big strategy stalled out and a messy internal situation, where do they go from here? Well, the company is now facing a very long and very uncertain road to try and get back on track.
Now they are making moves to right the ship. They brought in a new CFO and new sales leadership, some experienced hands to stabilize things.
And crucially, they got that third-party validation that one of their clients was waiting for. And guess what? It proved the new model actually works even better than they claimed. So now, with that proof, they're rebuilding the sales team to be more focused.
But, and this is a really big but, nobody should expect a quick fix here. This timeline is pretty sobering. The CEO himself came out and said it could take 9 to 12 months just to get one single client fully scaled up on this new platform. That means any real significant growth across the whole company might not show up until 2026 or even later.
And that leaves us with the ultimate question, doesn't it? Is what Ibotta is doing a truly visionary bet that will totally redefine its industry and create massive value down the road? Or is this a painful, fumbled misstep that has just destroyed the company's credibility with investors? Right now, the market has spoken loud and clear, but only time will tell if this incredible gamble actually pays off.